He joins us now from Hong Kong. Stephen, great to have you with us. Good to see you. I want to start by asking you about the recent rebound in the dollar versus the yen and versus the euro. Apparently, some of the data pointing to the fact that perhaps the rest of the U.S. economy not affected by the housing sector. I mean, is that your take on the situation as well?
I think it's still a little bit early to say, but the data yesterday was quite positive, and but with Friday's jobs numbers coming up and with yesterday's ADP numbers being better than expected, we expect to see strong non-farm payrolls data on Friday, so we expect to see this momentum continue for the rest of the week, and overall we could see the U.S. Against the euro come back below the 140 by the end of the week here.
Right, Stephen, then, you know, the market seems to be expecting, again, some positive numbers from the non-farm payrolls out to, later on Friday. You know, will it be enough to sustain the U.S. dollar's rebound? I mean, will the market be looking further beyond that data down the road in the weeks and months ahead before there's going to be any sort of a sustained rally or appreciation in the greenback?
Yeah, that's a good point. That's what we're focused on today. But I think what we have to look at is that it's not going to be a real rebound. I think that we might see a pullback of the euro because it has gained just so much dramatically over the past couple of weeks here. But I think that looking at the CFTC futures that really look at the overall demand that traders are doing on the outlook for currencies, that hasn't really reflected strong positions for a lot of these currencies except for the Australian dollar. So the bottom line is that we look like the U.S. dollar has been a little bit oversold, and I think we're just seeing some rationalization come back into that. So overall, we could see it come back a little bit. Then as we head towards the end of the month with the Fed meeting at the end of the month, we could see it come back towards above the 142 level.
Stephen, I want to ask you as well, you know, there's been a growing trend, if you like, you know, of fund managers and so forth, currency forex managers actually, you know, diversifying their portfolios away from dollars and into currencies like the Aussie dollar. Do you see that as a longer term trend as well? And, you know, obviously that would result in, if you like, permanent weakness in the greenback?
I think it's been a trend that we've been talking about for the past year, past 6 months. But overall, I think that the greenback is still going to be the major currency for the world. It will still be the currency that the oil's pegged to and everything else. So basically, I think that will continue to be the sentiment. But what we have to focus on as well is that we're going to continue to see countries such as, the G7 are focusing on the fact that the U.S. dollar might not. The U.S. dollar weakness might not be helping their economies too much. So I think that diversification is going to continue, but overall that the U.S. dollar will remain, over the near term here, the major currency for foreign currencies to invest in for the reserves.
We do have the ECB and the BOE meeting as well. You know, what are you expecting them to do, to hold?
Yeah, we're expecting them to hold it, and with sentiments for dovish sentiments and the BOE and the European Central Bank should come up with more of a hawkish sentiment, but we don't expect any movements today and at the next meeting as well.
As far as you know, looking ahead to today as well, I'm not sure if you follow the Philippine Central Bank. They're expected to meet and come up with a decision today as well. Are you expecting them to move, to cut perhaps?
No, I think it's a little bit early. I don't think they'll cut today. They might cut next month, but I think they're going to still continue to focus on the inflation. And although the liquidity situation has improved since April on the money supply, I think that there's still some time here that they still want to continue to hold rates where they are, but look for a potential cut to come up in their November meeting.
November. Stephen, we're also getting flashes right now. Newswire saying, Reuters saying that the Korean won is extending losses versus the dollar right now. You know, dealers are citing intervention. Because of intervention for this reason, you know, can I get your comments on this? The won looking too strong for the exporters, perhaps? Yeah, that's something that we're seeing. And when I look at the won, I really look at the Japanese and won cross, and that's now at 7.8, where a couple of weeks ago it was at 8.3. And when you look at Korea, they really have to focus on the overall yen situation, and because the yen has been depreciating a little bit, the yen has a little bit more competitive advantage. So I think that the concerns for the exporters are coming back on the table here, and that's why we're seeing some potential intervention come up with the Korean situation. Stephen, we're also looking at, if you like, a modest return to carry trades. They have risen this past week or so. Again, is this going to be a cautious return? Are people testing the market right now, or are they back in a big way?
Yeah, I think you're right. That I think they're testing the market right now. We still could see some skeletons in the closet here. So I think that the market is going to be trading a range. And looking at the yen situation, it's still below 117. I think that it's going to remain to trade in range for the next couple of weeks here till we get the next Fed meeting in October. Then perhaps to see if the BOJ is able to increase in November or not. So looking at the carry trade situation, I think we're really seeing it in Australia, but everywhere else it's sort of taken a bit of an on-hold pattern here.
All right, Stephen, thanks very much. To Stephen Rowles, he's an analyst at CFC Seymour. Just ahead, shares of Macau